Yo, what the frick is up, everybody? So, long time no YouTube video, and it's not really because of any reason other than the fact that I didn't find much enjoyment or help doing this, so I think I was doing it the wrong way. I was just kind of making a video, posting it, but now I want to actually put some effort into it and make like a quality YouTube video once a week or something. I'm not saying this is going to be the quality video, but I think this can help the quality video come to life. So we're just going to be back testing today and just kind of trying to coach myself because I think that's really valuable. One thing I learned over the past kind of couple weeks of my trading, because I passed the funded account and then I lost the funded account like half a month later, and then I lost another account just being stupid. So I kind of have to just continue, like, because you can't give up. You know, there's two things you can do. You can give up and you can just say you did good, that was your run and you're over, or you can just keep going, put it all in, and like learn from your mistakes. You can't like keep thinking about your mistakes because then you're just going to keep doing them over and over again. You have to learn from your mistake and forget about it and don't do it again. So today I'm going to be coaching myself because I learned on this podcast that the best way to learn, you know, you can get mentoring, like hindsight mentoring, that's good, but the best thing that you can get is coaching in real time, and I don't have a coach right now. So I think that I can use myself as a coach because sometimes you use a different identity when you're trading. Like you have that greed and that fear that you're using to trade, but then you have that coach in the back of you that's really smart in trading, but he's not put to use because your mind doesn't put him to use because you want to just make money, because you have the end result of making money. But now I'm focusing more on the process, and if the process, the coach behind me, inside of me, can come out. So we're just going to be backtesting today. So we're on the 1 hour chart, and this is for my last backtesting session. This is the trade that I was going to take, but the whole website glitched, and let's see. I just want to see if I can place an order. It still didn't let me place an order. I need to restart the website. What the fuck? Me backtesting. Not this one. So this one I'm only taking 8+ steps, like the highest quality setups that I can find. So the way I do my screen is I do a 3, I do a 1 hour, because I'm a scalper, so I do not need like that high of a time frame on. So this is the 1 hour chart. I'm going to get the 15-minute chart that I can switch, interchange with like a 4 hour if I need to, or a 5-minute or 3-minute, because sometimes better inversions are on that time frame. So this is the trade that I did take earlier, but it didn't go through, so I wasn't able to actually execute. So you see here there's this clean singular fair value gap, and there's a sweep on liquidity. And something you see here that I like to see is just the size of this candle. So this is 1 minute. Price came all the way down here, swept this liquidity, and rejected insanely fast. And after the rejection, there was no stalling around here, like accumulation right here. It was right back up, inversion, retest of the inversion, and then moves up. And I think price would keep going higher. But now we took out this high and this high. So you always have to be focused on the time and the liquidity that price is moving from, because price is all about internal range liquidity and external range liquidity. So if we already took external, then we're going to go internal, and then internal to external. That's just the basics of market structure. So this does look like a power of 3, so I could be looking for longs long, at least to like this high. So yeah, we're just going to keep watching price. Right now it's 950. So, you know, that first macro is coming up, but you don't want to force a trade in that macro. You just want to understand that time frame is good to take a trade in. If your setup comes in, it will be higher probability because you'll have more liquidity during that time frame. So we do get that big move down after that external range liquidity is taken. External range, external. We go internal. Go to the discount of the range. And so if we get this inversion, we're tapping back into this previous inversion that started the kind of move of the ranges, and we're tapping back into that. And if we inverse this, it would be a trade that I would take in live time, because we already got that in external, internal, and we go internal to external, but we could go to this external. But I don't see a good reason why we would do that. I would have wanted price to close above this in the next 2 minutes, which I don't completely think is going to happen. So price is going to close below that. So if we didn't have that order block created, so I think price will continue to go lower. So now we have this order block right here that price is coming in, and you could take your entry here, but just looking at it, it's not A plus, you know. So we inverse it. You know, I don't know if I would take this. What's the reasoning behind me not wanting to take this? We're in this big inverse fair value gap. Although it's not high probability because there's this one and this one that was inversed and it didn't do anything. I still think this would be a good trade, so I'm going to buy with one, and I'm going to put my stop loss. See, a good trade with this is I'll put my stop loss right here, and I'll exit if price closes below that or hits my stop loss, but my take profit is going to be this high up here. So we get that move straight up. Just I think it was because we had that order block right here tapped into, and once the price tapped into this order block, or no, this is breaker block. This is the up move before the liquidity sweep, which is this liquidity sweep. Sometimes you can't really see it, but this is the liquidity sweep right here, and price moves up higher, and then we tap back into that. So I would be out 75%. Let's go to 80% actually. 80%. I'm going to move my stop loss just to break even, and you can kind of see what price will do from there. So I'm going to get out if a fair value gap is inversed, or if there's, see, price didn't even get to this high. So I'm out there, and that's fine. You know, kind of that break even will save you. And so for the day, I will be done, just because we can keep watching, just so I can continue learning from price action, because the more price action I see, the better trader I will be. But the reason why I think this trade worked was just because there was that clean sweep, or not clean sweep, but there was that sweep with that move up, and then the order blocks being played in. And as you can see, this order block right here, you don't want the consequent, or the no, it's not consequent. Holy fuck, what is it? It's not consequent encroachment, it's got a little Zinnabun in, so like I'm kind of twisting in the head. But we did not touch the 0.5 level of the order block, which does show that price to move higher. And then when we created this next propulsion block, and then we tapped back into it right after the inversion, that's a clean entry for me. So just good to look over those after you take that trade. Remember, it's all about that external, so we swept this. We're still kind of trading within just some little range. So now we sweep external completely. So this technically is a trade. I wouldn't take this trade because I'm already up like 400, 500 for the day, which I'm not trading my P&L. But the thing is though, I understand what certain money can do, and I don't want to just lose it, because then I'd just be losing my P&L just to take a trade. But you have to be able to really see these trades, and if it's completely A plus, then you can take it, but don't put more risk on the table after you've already put risk and gotten a reward, because just the fact that you put risk and got a reward back in this market, you gotta be able to take it. So that did work to this high, because remember, we always take it to the internal high. So now either you could inverse and go lower, or you could use this to go higher, which obviously it's going to do both. It's going to go lower or go higher, but you want to set these ideas in your head so you can kind of play off of them. So like, oh, it's going to go higher. Now we see these fair value gaps inversed. So now this fair value gap inversed, this internal high taken out. I think we're going to continue to see higher prices. We're now at the next macro, so this inversion could work as well, which it does, this tiny inversion right here. So price plays with that little sweep of liquidity. So there was no actual entry in here, so I'm going to go to the next day. So price does take out this high, then it reacts to it, and this is a very big manipulation right here. manipulation leg, and if we put the fib retracement on it to look at the standard deviations, we're going to be looking for that 2 to 2.5, which is like right here. So this technically would be my next target, but it's not like I'm just going to blindly long there. It's just a fact that if a long setup occurs and it's within my model, it gives me a higher probability because now I have a target, like a 2 to 2.5 standard deviation, which is high probability for it to reach, along with that buy-side liquidity right there. So now on the 15 right here at 9:30, and I don't really look to take a trade until after 9:45 just because price is super volatile and your stop can just get hit and taken out. And I want to start setting good stop losses and ensuring that I do not risk too much because that's very important. So price goes lower off the rip, which is what we want to see. We want to see 9:30 to 10 be the Judas swing, and then 10 o'clock we can get that different move. So if this was just one clean fair value gap, I'd be more inclined to take it, but it's not. And price inverse this, took out this, so it does, but there was just no model, you know? My model wasn't there. So I'm not going to take something that's not my model. So now we have this order block, so we could get inverse fair value gap inside of there. Remember, this is Friday, so it's not the highest probability. There is this. To look at this trade, we are inside of a range, and we haven't reached that discount, so I would have taken it if we went into a discount. And so it does work to this high. Obviously, that's what we're taking. We're just looking for 5-10 points here and there. So there's nothing really, because lower. Look at that. This is low volatility. We don't really need to be taking many trades during this. They don't have all the indicators on here, I guess, which is fine because it's FX replay. I'm gonna skip forward to like after lunch hour. This is really low volatility, so I'm gonna go to Monday. Because the reason why I don't want to put a trade in, even if it is my model when there's low volatility, is because I'm kind of a momentum trader. So when I see that momentum and the fair value gap gets inversed, I'm in, and I don't want price to stall around there too much because it just lowers the probability. So when there's low volatility, price is gonna accumulate lots more because there's not as many buyers and sellers. Or that's what I want you to think. This is Monday, 9:30. Get that move lower. Big 1 hour candle. Big drop. So just watching price, you know, not forcing anything, obviously. Relative-ish equally lows right here. So just that is a nice sell side, and we're gonna watch price from here. The price will just rush there, and we could see I'll take this trade. This is a good trade. 9:58 during my macro. We get that first inversion, which does work. And then we're basing it off of this fair value gap. Singular one, no other fair value gap. Relative-ish equal highs here for my take profit. And so I'd buy 2. And I'd put my stop loss. I'm fine with getting stopped out. I'm going to put it right here. So we get stopped out, and that's fine. We get a big move higher, so I think my stop loss should have been lower because price is just going to run to that high now. So the trade, although it wanted to tap back into this first inverse fair value gap, which I should have waited for an entry, but that's fine. You know, my bias was still right. And it is a Monday, so I'll sell two here. This is a good trade. Take 50% off at that low. The stop loss to break even. Get stopped out, that's fine. I would take another there. Can't see there's this fair value gap that was inversed, at least to this low. So we get that fair value gap inverse. I'm taking it to the low. We're gonna be out 50% there, 90 bucks. Move stop loss to break even. I'm gonna get up there. So we have 5 minutes left on it, so I feel like we might get some distribution lower in the next 15-minute candle. Now, price inverse is this. I'll be looking for longs to here. There's equal highs here right now. So now these longs are starting to really set up because we have equal highs. We have the low of the low swept again. So we don't want to see this be used as a fair value gap. We want to see it used as an inversion fair value gap. Price inverses it. We want to see a model before those highs are taken, but a model is never guaranteed. Those highs are taken and that model is off now. And you know, you could have just longed there, but there's no model, so your probability would be lower. You know, it's about liquidity, time, and your edge being there. Don't like any of this volatility or the way that price is moving, it will lead higher. But yeah, go to next session. So as I guessed, price is going to lead us higher. And that first inversion fair value gap helped hold price. Okay. So this is the end of January right here. The 1 hour chart, we're in this big inverse, this BPD, balanced price range. Just looking at price action. There was a good trade here. This sweep of liquidity tapping into this bullish PD array. My coach said he's not going to be there today at work. You get that clean sweep, and that was a good trade as well. I just didn't see the really need in it. It wasn't my sort of trade. Relative equal lows we're shorting to. It's extremely bearish right now. So this sometimes your ideas don't work out, but it's okay because your idea is not there's no risk based on your idea, so you'll be all right. So the reason I took this trade was just based on this fair value gap being inverse, the momentum to the upside, and tapping into this balanced price range right here. Too much accumulation. Just gonna put my stop loss here. I'm gonna get out of 50% there because as you can see, the more that price, it's kind of like options contracts. The more the price is standing around here, the more money you're losing, but not in reality. The profits that if you're in here, enter here, price goes up here, and now it's chopping. You have these $500 profits. The probability of keeping it is lowering and lowering the more and more you hold it. So if price is here, 10 minutes of just accumulating after you're here and you're up 500, still 400, 500, 400, 500, 400, 500, 400, 500, the probability of you keeping more above 400 is lowering and lowering the more price there because the chance that price just sweeps your liquidity to go higher is extremely high. So as you can see there, I'm out 50%, and we'll just let price do its thing. And that was like what I was saying. So yeah. I'll take this trade. That was kind of hard to just explain why. So I can explain why. So the reason why I took this trade was because this first liquidity sweep right here, price goes down and quickly reacts up. This is a 30-second inversion model. That is good, but I can't see it because I'm on the 1 minute time frame. And then price comes again and it sweeps these relative equal lows, and it comes back into this inversion fair value gap, inverses it without taking this high, and then price moves up. So now my stop loss is at break even, and I'm going to exit out there. This price was going to come and steal my stop loss. 4 more minutes of this, and then I have to go watch the Olympics. Looking for the end of the day market setup, right? So there was no setup, that's fine. We're going to go to Wednesday. It's crazy, right after market open, it's probably earnings or something, and then the price moves up to my target. Okay, so we're starting to see that move higher, so we can kind of base our market off of longs. This looks like a good trade. Price is now trading above this high. There is no actual mini inversion, so I'm not going to take it. So it is good that I didn't take that one. This was a good short, actually, but it would have stopped me out if I even took a short. Yeah, I didn't take that model because it wasn't that clean. It's about what your subconscious brain would think. I'm not thinking about the money or anything because that doesn't matter because there's no money in this right now. So we got this fair value gap right here. Tiny sweep of liquidity, almost more equal highs. When I take it, I'd sell it, and I would have my stop loss be right here. I don't want to move my stop loss because it's fine. So sometimes the market, I can feel it just kind of annoys me when it doesn't give me an entry and it'll just kind of float to these targets. But you have to understand that it not giving you an entry is it telling you that you are not supposed to trade in it. And that's fine. That is fine. Okay? So you just have to be okay with it at certain points. You know? Now, price in versus this closes above, then we'd be looking at high probability longs. Price is literally just masturbating. And then now you get that move higher. Like, I don't get it sometimes. There's got to be news that it doesn't show me. 7 p.m. It's later. I knew it would get to the high. It's gonna finish off on a win because sometimes you got it. You know that what price is gonna do. I know it's up that high, so that would have been my entry right there. I would have been eating. That's fine. And that's gonna be it for the day. And I'm gonna make a more longer video, probably an educational video rather than just me backtesting. And we'll see you in the future. Thank you.